Are we repeating history? Are we doing the same things and making the same mistakes that we made in the early 2000s, the same mistakes we made in 2006 and 2007 that led to the real estate crash and all-out crash of the financial systems? Are we there? Is it going to be okay, or are we going into the next Great Depression? So stay tuned. We're coming right back, and we're going to talk about how fucked are we really going to be. Today, I've got an all-star cast. So let me just kind of go through. I got my partner in crime, Stephen Nagy. We've got Larry Steinhaus from Investor Schooling. And we've also got Jake Alexander, who we thought was a CPA. But Jake, what actually are you again?
I'm an EA, which just stands for an enrolled agent.
An enrolled agent. He's the guy that helps you when you get in trouble with your taxes. So we're going to get into a lot of things. Stephen, what should we start with? Should we just go into the history?
Oh man, yeah, there's a lot going on right now, with the markets, with what the Fed is doing to try and control things. We got this new Omicron COVID variant out spooking everybody, and what's going to happen with that. And the real estate market continues to just go crazy. So I know we got a lot to talk about today. Let's dive right in.
All right, well, let's talk first about the history. The global economy continues to be strong. All of you looking around, you are in what they call a bubble. And if you're too young to understand what that means, it means beware. All asset prices are inflated, from stocks to your stupid NFTs to your cryptos, all the way to your stocks. Everything is inflated, including the house that you live in. Welcome to the world of bubbles. You guys, when you were kids, you remember those things you got? You just blew through it and it made the bubbles. This is the one that makes the really big bubbles. That's called government stimulus. They pump a whole bunch of your taxpayer dollars into the economy, exploding the assets. And you know what eventually happens? Well, when you were a kid, what happened to those bubbles? You watch them so amazed at how pretty it was. Then it popped in. Holy shit. Well, is that going to happen again? Because you know what? There is solid economic broad U.S. experts and U.S. exports should expand further in the coming quarters. Overall, the U.S. economy seems likely to expand at a moderate pace over the second half of 2007. I gotcha. Yeah, we're not talking about today because those aren't exactly what's happening today. What you're seeing in the news is one giant fucking lie. And if you think anything other than that, you are delusional. And I'd love to argue with you. So Larry and Jake, what is your take on what is happening in the world today?
Go ahead, Jake.
I'll jump in there. I love what you said about if you're young enough to not have been through this before. I'm 38, so I kind of experienced this, around a little bit younger age. But in my adult professional life, I think it's fucking crazy what's happening. It's, people's houses are doubling, tripling in value. Businesses are skyrocketing. There's this whole new economy, from a tax perspective that's popping out. And I think it's totally nuts. I love it. I'm totally along for the ride, but there has to be a correction on the horizon here very soon,
Absolutely. Larry, what's your take on what's happening in this crazy world we're in?
I love it. Hey, I love it. Anytime the economy is up, I'm making money.
Absolutely.
And when the economy's down, I'm preparing for the next time the economy's up.
Absolutely. But all of us on here, we're pretty experienced. Larry, you're the
I'm the most experienced. I understand what you're trying to say there, Chris.
Well, you actually are. When it
you don't have to say it any louder. I know. I'm 10 to 20 years older than everybody on the street. I get it.
I threw it out there. I'm 38, Larry. So
that's what I said. I'm 20 years older than you.
Yeah, so you got lots of experience and you know how to do this. But what about for the average person? The single mother that's got a 401k and is watching all this going up and is piling money into crypto and everything else because she's feeling like she's missing out and trying to get ahead to pay for her child's or children's college education. we understand how this works. Hey, we can make money in every single market cycle. If the market's up, we're making money. If the market's down, we're making even more money. If the market's sideways, we're making money. But the average person doesn't have that luxury, and because they just don't have the knowledge to know how to do it. They listen to the news, they see everything going up, they see what's going on, and we're talking about history here, and history is repeating itself all over, because that quote that I read, where it said, U.S. economy seems likely to expand at a moderate pace over the second half of 2007. That's where I had you guys going, with growth then strengthening a bit in 2008 to a rate close to the economy's underlying trend. Then Ben Bernanke, that was Ben Bernanke's quote. Then within weeks, the biggest housing crash in the U.S. history occurred. And that's what I was saying. Some of you are too young to even remember the Great Recession, but I'll tell you, I remember it. I was a financial advisor living through that. Larry certainly remembers that. Larry, did you make money in 2008? Were you ahead of that one?
I actually went bankrupt in 2008.
See,
I lost everything. So check
I went one payment away from being bankrupt. If it wasn't for my girlfriend paying for the mortgage, the utilities, and letting me move people into our house, I would have went bankrupt. So we were all on the wrong side of the fence, but we've gotten wisdom because we've failed enough times that now we're ready. But the average person, whether it's a millennial or someone, younger than us, they haven't gone through this. They don't understand what's about to slap them in the face. What would be the best advice you could give to people right now?
All right. So I'm going to tell you, the fact that I went bankrupt in 2008, most people would say, hey, it was because the economy crashed. It had nothing to do with the economy. It had to do with me getting greedy in 2006 and 2007. When I started to see everything going up, like you said, houses up 100%. By the way, they're literally up 19.5% year over year from September to September. That's insane. That houses went up 20% in actually 1 year. It's fantastic because I happen to own a lot of properties, so I like that. But it's insane. So in 2006 and 7, I changed my business model. My business model used to be, get properties that paid for themselves. I'd buy a property, I'd collect the rent paid the mortgage, and I would enjoy doing, enjoy real estate. So come 2006 and 7, everybody said what they're saying now. Hey, if I buy a property now, hey, in 2 days, it's going to be worth $100,000 more than I paid for it. By the way, that's happened to me a couple of times. I have bought properties that were worth $100,000 2 days after I bought them and then sold them for $100,000 more. But I'm not planning on that this time. This time, I have enough properties. By the way, I have enough properties I never have to work again. But I have enough properties, and all my properties have plenty of equity in them. All my properties have incredibly high rents. So even if there is another 2008, I don't even think I would notice it. But are you ready for me to tell you why 2008 happened, Chris?
Yeah, why did it happen? Besides greed.
No, it wasn't greed. I'm going to tell you what it was. And this is why we have a problem right now and why you really need to watch out for what's about to happen. So in 2001, what was the most dramatic effect that we had in 2001? What happened? Do you remember?
Was it the planes hitting the towers?
It was the planes hitting the towers, right? 9/11.
I remember that day.
Right. So now you were in the financial industry. Were you in the financial industry in 2001?
No, I entered.
Were you still in high school?
Well, I graduated high school in 2001. I was going to say.
Yeah, I was a business owner. So the .com crash affected my business, which forced me to have to go back to work, and that's how I landed in Wall Street.
Got it. I was actually I owned a computer consulting company in 2001. So you can imagine how devastating that was.
Oh, my goodness.
But I will tell you that in 2001, I remember March 2001. So this is a few months before 9/11, of course. March 2001, I started noticing a serious downturn in the market. But if you really understand that in March 2001 was the end of the normal 7-ish, 8-year cycle. So you probably all know this, that typical cycles are 7 to 8 years. And then, we go up 7, 8 years, we come down 7, 8 years, we go up 7, 8 years. It's still moving up, but it's always moving down a little bit, then up, and that's typically what happens. So come in 2001, we had the typical cycle that was supposed to go down. Then we have 9/11, and we have unbelievable fear. We have the stock market crashes. We have, first of all, I don't even remember, but the stock market only went down 1,200 points. Now, 1,200 points at that point was a lot. I think it was 4% at that time. 1,200 points now would be, it's bad, but we'll recover from it. So that it was a bad day, obviously, in the stock market. The government decided that they were going to make it better for everybody and make companies not go bankrupt. They were going to bail all these companies out. They bailed all these banks out. They bailed out the insurance companies, and there was a bunch of stuff going on underneath because I was in business then and I knew some of the things going on, but I don't want to get into that. So what happens is in 2001, because they throw all this bailout money in, we never had our recession. We never had our downturn. I'm not going to say recession. We never had our downturn. So what happens? 7 years later is what year? 2008.
Absolutely.
We're supposed to have a downturn in 2008. And what happens in 2008 is we have to pay for the downturn we didn't have in 2001.
100%.
Now, let's fast forward to 2019 or 2020. What happened?
COVID.
What did the government do?
Printed stupid amounts of money.
Right.
Dropped interest rates to zero.
And what was the next cycle end date approximately?
The next cycle?
The cycle that we were in before COVID.
Oh yeah, that would that have been? That would have been
2021, 2022.
Yeah, I mean, but it's not just that short-term cycle. It's also a 45 and a 90-year cycle converging.
Hold on, though, Chris. Wait. So I want to make a point here because I think it's important. So here we are. We're in 2021, and we did the same exact thing as we did in 2001, and we saved the economy by flooding the market with money, or the Fed flooded the money. In fact, this time they actually flooded it with more money, more percentages of money, insane amounts of money. I don't know about you, but I got a couple of great loans from the government only because of COVID. So here we are once again, and sure enough, 2021, we have an increase in house prices, I said before, 20%. And what happened? The same exact thing. So why don't we just take the clock and put the clock forward to the next 7-year cycle, which puts us right around 2026, 2027, and we are going to have another 2008.
Well, it's funny you mentioned that because as I'm sitting here showing our TikTok viewers the little chart that I did behind me, which I did not come up with, that was done by an economist. But I think what you just said is summed up quite well here. If we look at real home prices adjusted for inflation, that's the blue line. And there was a period of normalcy from 1890 all the way up to almost 1997. And that was if any of you are older or have grandparents, they couldn't just go out and buy a house with almost no money out of pocket. They couldn't just go out and get a house for 3 or 5% down. No, they had to save to buy that house. That was reality. That was like the real world when you actually had to have the money to buy shit you wanted. Instead of today, you don't need any money. You can just buy all the shit you want because of debt and because of excessive printing. But you can see what happened here is when that printing came that Larry was talking about, we created the bubble, which was the 2008 bubble, and that was created in the early 2000s, as you can see where that steep line, and these aren't perfect lines, but then it fell. But now look what happened. See, during the Great Recession, we had something interesting happen. The price of houses based on adjusted inflation and the nominal home prices, which is the real price of the house, got way out of whack. So if you look at the blue line, that would be your normal, that's the normal, right? Until recently. But if you look at the red line, that's where housing prices are. They are through the roof. They are far higher for pretty much the first time in history than what they're actually supposed to be based on adjustments for inflation, even in this crazy inflation period we're in. So to draw the conclusion, what's going to happen? Well, if you look at an economist, he says right here, natural support for home prices would be to fall back to the 2012 lows, which would dictate a crash of 48% in your housing pricing. Listen, we're always talking about the stock market, but the stock market's probably going to fall 60%. Housing, based on these numbers, this economist's take could fall 48%. I bet you a lot of you are thinking that's impossible. That's not going to happen. Things aren't the same as they were in 2008. They're not out there giving loans that are no doc and no down loan or no down payment loans. Of course they're not. But you're missing the whole point. You don't even understand economics if that's what you think. I hear it all the time from mortgage brokers. No disrespect. I love mortgage brokers, but they are in a world of, I don't even know what you call it. They're delusional because they think that this is just all going to happen because they say this. They say, yeah, but there's so much demand. Millennials are buying houses. There's not enough housing. What the fuck, man? Like, do you understand that when the stock market drops, that means people lose money, their retirement, everything drops 30, 40, 50%. Then what happens next? They get laid off, or they get fired, or they get let go because their business closes, or the company they work for is laying people off. Because in a down economy, businesses don't need to hire new people. So, hey, good news. Nobody wants to work today anyway. So, hey, that shouldn't affect anybody. But when people don't have money to pay for housing, what happens to housing? The price falls out because it's so overinflated right now because of all this stimulus money. And if you guys think right now that just because they don't do no doc loans and no down payment loans, that there isn't a bubble or there isn't hanky panky, man, go to the
new
bank.
doc loans are back. The no doc loans, the stated income, that's all back right now. Like I've been getting hit up by mortgage lenders. Hey, we got these available right now. Send your investors. It's back.
So it's crazy that people think that this is going to just keep going to the moon. Like that people are out there thinking, oh my God, there's not a problem. There's not something weird going on. Look around. The median home price is over 430,000. Jake, do you know what the median home price is right now?
It was about 435,000, something like that, I believe. Yeah.
Dude, that's insane. That's insane. Like I'm thinking, like I was a huge flipper from 2006 to 2000, let's just say 18, 19. And I was buying houses, 100, 200,000. That was the median. Now we're in 430. Like, is that normal? No.
My first house I bought was 120,000. This was like early 20s. That was a big deal. It was a big accomplishment. And I remember I kept that as a rental, bought a house for like 235,000. And that was like, all my friends was like, wow, this guy's doing phenomenal, you know? So to think that that's not even the average price now, that's totally insane to me.
It is.
I don't know. Most of my properties I paid under 100,000 for, and now they're all worth between 2 and 3.
Yeah, and I'm not saying. Listen, believe me. I'm going to make a statement here, just for everybody on TikTok and all the other channels. Like I think real estate is the single greatest investment on earth, hands down, no questions.
Absolutely.
I will never ever come off of that statement. However, there is a right time and a wrong time to buy any asset, including real estate. And there's a right strategy and a wrong strategy for every economic cycle. Right now, you're at a bubble. So if you're buying, the one thing I will tell you is I hope to God you don't have an exit plan like in the next couple of years, because you're not going to be exiting for anywhere close to what you paid. But if you're like, nope, I don't plan on this. This is a 10-year to 20-year hold. I'm just going to rent this out. You're probably just fine. But understand
it. Slow down, Chris. You're doomsaying. Stop doomsaying.
Real fast, time out. Real fast. Hold on, guys. Chris, just make sure your phone is not muted. We got a text that your Instagram is muted right now. So if you can just double check that.
It's because my Instagram's a pain in the ass, and this does this every single time. The phone is not muted, but for some reason, Instagram loves muting me. I don't think Facebook likes me.
Well,
I really
Facebook,
don't know.
I know doesn't like me.
Yeah, I don't even know. It's not muted, man. There, I muted it and I unmuted it. I don't know what's going on with Instagram. It's just nightmare.
All right, so let me get back to what I was saying here. All right, you're doomsaying, man. If you actually think property values are going to go down 50%,
I truly don't. I'm just reading off of this economic report.
That's insanity. All right. Will they go down 10, 15, maybe 20%? Yes. That could happen. And if you're prepared for that, that's fine. So the average person, do I actually hear a dog barking? What kind of professional is this? We have a dog barking in the background.
Well, listen, every other word that comes out of our mouth is a swear word. Is that professional? So what's the difference if a dog barks or a cat jumps on here? It's just normal.
That happened when you unmuted the Instagram.
Let's make it simple, right? Let's make it simple. When a fucking dog barks, it's really unprofessional. If you want to sit here and fucking curse all day long, you go ahead and you can shit your brain out for all I care. But when a dog barks and I'm on the air, I'm leaving. No, I'm just kidding. All right. So let's get back to reality here. So, no, houses are not going down 50%. They could, like I said, 10, 15, 20%. No big deal. Relax. It's okay. Most people are buying houses. They're buying houses to live in. And if they're smart, they're buying houses to live in, and they're not over leveraging themselves to live in a house. That was part of the problem in 2008. People were over leveraged. Don't make that mistake for the house you live in. Live below your means, and you'll be very, very happy.
However, how many people right now have equity in their homes and rentals, and they're pulling out all the equity that they can through HELOCs and refis and whatnot, and just blowing that money or dumping it in, you know?
Well, it depends what they're buying. I mean, I every time I pay off a property, I instantly get a HELOC on it, and I either use that money to buy another property to put maybe in my infinite banking policy, Well, whatever
You
I'm
are.
doing with it, right? That's exactly right.
You are.
Exactly,
Most
right,
people
right.
I talk to are not doing that, though. They're using that
What are they
equity
using their money
for
for?
other stuff.
Like
Buying a
what?
new truck or a new car or something like
Well,
that.
how else are they going to buy a G-Wagon from Chris for $150,000? I mean, they got to get a home equity loan to buy a G-Wagon from Chris, right? I mean,
I
I
don't know
couldn't
where he
believe
had the
that
money
one.
to do that, but he did, and he wrote the check. So I don't know. Government stimulus check, man.
What you did was
He invested a
fantastic. I
stimulus in
sold
crypto and turned it into six figures. There.
exactly right, exactly. So these are all the plays. Now, the other thing too is crypto is going to crash this economy, and it's going to crash the economy not necessarily because crypto is going to go down or up. It will go down, but it's not going to crash the economy because crypto is going to get down. It's going to crash the economy because so many people who have no idea what to do with money accidentally bought crypto and accidentally made money and accidentally started buying Lamborghinis and G-Wagons, and they're going to be in trouble when they realize that that's not how the real world works. That happened in 2006 and 7 too. We had a bunch of real estate investors who had no idea how the real world worked, and it became a nightmare for them. Now, in 2008, I went bankrupt because I did stupid stuff and bought properties that were overpriced and didn't get enough rent, thinking that they were going to go up every day like people are doing with Bitcoin. And in fact, that was the only 2 years of my entire life I did that. And it's funny because it destroyed me because I changed my business model, listening to people who had no idea what they were talking about. After I had been doing it at that point, I'd been doing it for 20 something years, and I should have known better. But I decided that, hey, maybe I'm the dumb one. Maybe I'm the dumb one who's buying properties conservatively and renting them and paying the mortgage. What I really should do is I should buy property that cost me $100,000 today, and I could sell it in 3 days for $130,000. Well, no, and not only that, not only could I sell it for $130,000, it wasn't even worth $60,000 by the time we went to the courts.
So here's an interesting thing. I mean, I'm just reading the comments as you're talking. So Crypto Legend on TikTok, this is very rare. So I want everybody to know Crypto Legend. I mean, by the name, you would think that Crypto Legend is in crypto for some one way or the other. So somehow he had found our videos and he says, all my money goes into my money multiplier policy first, which that's so rare that somebody that's heavy into crypto actually made that one change and changed where their money went first. Now, he's probably still investing heavily in crypto because it sounds like that's what he knows, but he decided that he wanted his money to work for him for the rest of his life without him working any harder. So it just changed where his money was held. And then from there, he just uses that account, his privatized bank, to then buy crypto. I think that's awesome. I just wanted to give you a shout out there, bud. And then another thing too, I thought was awesome. Steve Weston came on and said, Mark Twain reportedly said, God makes more people, but he doesn't make more dirt. Justifies value of real estate as an investment. So Steve, like we kind of, I think we all agree. I don't know, what Jake's take is on real estate, but I will certainly say that I think every one of us here believe real estate is the single greatest investment of all time. And I think, whether you're doomsdaying it like this economic article here that I'm looking at, or thinking like Larry that it's going to be a 15 to 20% fallout, it doesn't matter. It's going to go down from where it's at today. So if your plan is
go up first, though, Chris. It may go
correct.
Up
it's still going up. Listen, I'm selling my properties right now because it's going up. I'm selling into an upward market. Mm-hmm. And when the market drops, I'll start buying again. I mean, it's just what I do. I buy low, I sell high, and I don't lose money, where everybody else loves to buy high and then sell low because they get scared. And guess what? The equation is you lose money. So
I'm doing something differently than you, Chris. I'm not selling my properties. I am pulling all the equity out of my properties, because I'm pulling that equity out of my properties now while the numbers are high, knowing that my tenants will pay that mortgage. Actually, my tenants go to work every day. I love this, right? My tenants go to work every day to pay my mortgage for me, and that's fantastic. But I'm going to pull the money out of my properties, and I'm going to take that money, put it in my infinite banking policy. I'm also going to buy other properties with it or other investments with that money, because right now I get the most amount of money out of it. And if I pull the money out of those properties through a loan, it's tax-free. And I still have the properties growing for years. Even if I go into the next recession, if I keep it another 7 years, it doesn't matter. It's going to be worth more than it is today by far.
Yeah, I mean, that's a good play. To be honest with you, my focus changed. My timelines changed. I don't have time to deal with, tenants not paying me or tenants doing the things that tenants do. So I'm I'm taking my money and running. And the other reason I'm selling, Larry, which you probably don't agree with, is I truly wholeheartedly believe, and Jake, this is where you're coming in, that we are going to never be in such a low tax bracket than we are right now. So I'm a high income earner, but I'm still in the lowest tax bracket in history. So if I sell today, and I gladly pay the damn government the taxes after I take all my deductions, 179, we're going to talk about. But if I do all that, I truly believe that no matter what, my taxes will never be lower than they are today. So the government can gladly have the taxes today by me selling, where a lot of people try to kick the can to a later date because they don't want to pay taxes. But to me, I think that's them either being uninformed or truly not thinking about the future and only focusing on the now. And that's just not the world I live in.
Let me tell you who's going to pay my taxes on my properties, Chris.
Not me.
No, my kids.
Yeah, well, I don't want little Vivi to pay my taxes on any of my
what's
stuff.
What's the difference? So even if they pay, even if they get my properties, and I don't know, let's say it's $10 million, right? And if they have to pay 50% of that to the government, who the hell cares? They got $5 million. You know what I got while I was alive? I got income. I got tax-free money that I pulled out of those properties. I got anything and everything I ever wanted. And hey, I get to buy jackets like this. Come on.
I know it. So Jake, let's get your take. And then Steven, I know you're a big real estate investor. I want to hear from you on this one too. And then we got to move on. But what are your thoughts when it comes to, there's two different strategies I heard. Mine, where I'm selling, paying the taxes today, and doing that because I believe the market is just at a high point, and then I'll buy when it goes lower. Larry, who's just doing the hold and says his kids will pay his taxes, which really all of our kids will pay the taxes anyway.
Yeah, no, I love real estate. We tell all of our clients that's one of the best tax advantaged investments that you can make for sure. And, when it comes to strategy, or I think too, like not to back up, but kind of to what we were talking about earlier, what's so interesting to me about this bubble that we're in is you're still seeing new construction everywhere. And there's also this whole new, Metaverse real estate you had pop up there, like land investments. I'm starting to diversify our portfolio and just to different areas, So the regular houses are going up, but you see these cookie cutter apartment complexes going up on every corner too, at least where we're at. So there's a ton of opportunity out there. It's just different. But, from a strategy standpoint, it all just really depends on what your end goal is. Everyone has a different opinion. I tell our clients, and they usually don't like to hear this, like you're going to pay taxes eventually. Do you want to pay it now? Kind of like what you said, or more Larry's strategy, like, let it ride out. And then once the inheritance get it, they can kind of deal with it. So I'm a big fan of real estate, especially when it comes to investing in your business. Like, if you own a business, commercial property is one of the best things you can invest in. You can start looking at things like cost segregation and all kinds of other advanced depreciation strategies. And it just, to me, that stuff's exciting. So I say it gets exciting, but to normal people, they just think I'm a nerd. But it's pretty cool,
Awesome. So Steven, I want you to chime in but I want you to chime in specifically on, are we going to repeat history? Are we going to repeat what we did in the early 2000s? Or hell, are we going to repeat what we did from 1929 to 1945? Where do you think we're going here? And then we're going to move on. And why not talk about government a little bit? Because, hey, that's hot on the topic.
Yeah. I mean, we definitely have a lot of mixed signals coming in, right? I mean, you have Larry talking about we're going to have this boom cycle going, bull run for another 7 years through 2027. Janet Yellen, who's the head of the Treasury, came out yesterday and said, when I say there will never, ever be another financial crisis, probably that would be going too far. But I do think we're much safer, and I hope that it will not be in our lifetimes, and I don't believe it will be. So she's saying we won't see any financial crisis. I mean, I know she's a little bit older, but for at least, 20, 30 years, I guess her lifetime would be. So we're hearing that. And then we have Jerome Powell, who is just, implemented as the chairman of the Federal Reserve, coming out this week saying how, he admits that the Fed got it wrong on inflation. They should probably stop calling it transitory, or maybe redefine what that word means, which we seem to get a lot of this redefinition of words and what they mean this day and age. So that's a whole nother discussion. And he's coming out, Powell, talking about how they're going to have to start tapering the buybacks and the economic stimulus they've been doing maybe sooner than they expected, which, part of that's going to be maybe raising interest rates again. So if we start to see that support from the Fed drop and interest rates start to rise, I think that's really going to make things happen a lot quicker as far as any kind of corrections or crashes that we see either in stocks or real estate. So it's interesting. I don't know if anybody's right. And I'll go back to what I've been saying for over a year now. Is it worth the extra few percentage points of gains to potentially lose 40 to 60% in the real estate markets if they crash? Because if they crash, it's going to happen fast. So I'll just stick with, be prepared, have a plan, have a strategy. Larry, you can hear Larry's strategy. You can hear Chris's strategy. They're different, but it's a strategy. And we talk about strategy a lot when it comes to stock market investing, crypto investing. And now these guys are talking about their overall economic picture. So I do think something's going to happen sooner than later myself. But I guess we'll wait and see.
One thing I got to comment on that. You had mentioned Janet Yellen's comment about we're not going to see this in our lifetime. Does anyone know how old Janet Yellen is? Like, how old is she? Anyone, any of our audience? Does anyone know Janet Yellen's age? Is she 70, 75? Is she 85? I mean, hey, looking, plastic surgery does wonders for these people. Anyone? Let's just assume she's in her 70s. I think that's a fair assessment. Of course, the bitch is going to be dead before anything happens. Like, come on, man. We have a life cycle. Like, we don't live forever. Like, so her making that statement is probably a true statement. But what about the 20-year-olds? What about 75. The 30-year-olds? Man, they are going to see some serious freaking hard times. And thank God, listen, like, people aren't going to like this. One of my good friends, he's passed, but, he wrote a book called Hard Times Create Strong Men. When is the last time any of us have had hard times? Oh, 2008? No. I mean like real hard times that made strong men. Like World War II probably would be the last time. Some of you might say maybe Vietnam, but World War II, there were some strong ass men. Think of your grandparents. Those are real men. Today, we got a bunch of babies out there that whine and cry about everything. They stub their toe and they think somebody just shot them in the freaking kneecap. It's like, what the fuck? Wake up, grow up, and man up. And I'm not just picking on men. Like, we live in easy times. We don't live in hard times. But you know what? Unfortunately, and I don't say this in a good way, the hard times are coming. We're going to understand what that means. People are going to have to man up or man out. I don't know. Like, people right now say the United States is not a good country and like they're burning flags and everything. Get the fuck out, man. Go to Afghanistan, Africa, somewhere. They all want you. Get out of here. There's enough people that want to come here that believe that this is the land of opportunity. And if that isn't you, why are you still here? Why? Larry will buy your house. Just get out.
Absolutely.
So, all right.
Most of them don't have houses anyway.
To chime in on that too, like Steven said, like have a strategy. I think, and maybe people won't like this either, but you have no excuse for not having a strategy right now. Like information is more easily accessible than it has ever been in the history of the world. Like I have clients that literally make $1 million a year from their cell phone. They started from nothing. We've got a client who's a single mother of 4 who literally invested her stimulus check in crypto and turned it into $1 million. Like there's no excuse for just not trying these days. Like, 20 years ago, 30 years ago, maybe, before we had the internet or any of these kind of things. But there's so many ways to make money now that if you're going to just sit back and wait for someone to hand it to you, like you're going to lose, that's just my opinion. So
the rescue, this is the rescue generation. Oh, they're going to take care of me. It's not my fault. It's their fault. It absolutely drives me nuts. You want to know how much money you're worth? Listen, anybody listening to this right now, you want to know how much money you're worth? Take out your paycheck. That's how much money you're worth. And when you lose that job, you're worth less. When you start understanding that you have the ability to earn a lot more than you're earning by not working for someone else and by not blaming other people for your problems, you'll become a multimillionaire too. See this? I'm assuming you. I mean, I know Chris. I know me. And I'm pretty sure I know Steve. I don't know you, Jake, but I'm pretty sure you're a multimillionaire with the rest of us. And we just don't care anymore. We don't care about money anymore. I mean, don't misunderstand me. I like making money, but what I care about most of all is the fun. It means
something different to us.
Right. It's the fun of making money. It's like I play Monopoly all day long. You ever play Monopoly when you were a kid? I play Monopoly all day long. I play Monopoly for real.
I never won as a kid, but I'm doing pretty good these days. But
yeah, right.
To chime in on what you said, like, starting a business isn't for everyone, but you said, like, if you have a job, and you're working 9 to 5 and you're not happy with it, don't go home and watch TV from 5 to 10 and then go to bed. Go do something else on the side. Like, that's how I got started in my business. I had a job and I had side hustles on the side, and then one of them happened to take off, and it turned into what it is. So I just want to throw that out there too. You don't have to just sit back and take what you're handed. You can go out and get it. There's no limit on what's available out there. So,
and
I had a paper route when I was a kid. I was terrible. I would do a terrible job delivering the paper, but I did it. Nobody else on my block did it. I did it.
One of the things that worries me. One of the things that worries me, though, is that kids are not going out and getting and learning hard work, and they're not learning the value of education.
Oh, no.
They're just blindly throwing me at crypto. I mean, look at this article. Ether overtakes Bitcoin as the king of crypto with a 530% return this year. I mean, imagine your entire adult life. You're just throwing money at this digital nothingness, and you're making all this money, and you think that's how investing works, and you think that's the way it's going to work for the rest of your life. I mean, I feel bad for these kids, right?
Well,
all right, I got to chime into that.
They have no clue.
I got to chime into that because, listen, what you just said is so important. And everybody right now, thank God, just like that woman that made $1 million in Bitcoin, like, good for them. Everybody's making a lot of money today. And I'm so excited and happy about that. It helps us all. But it's not about how much money you make. It's not about it's not about any of that. The problem is not what the money is that you make. The problem is, can you keep it? Like, I don't care how much money you make in, Shibu Inu or any of these, shit coins or Bitcoin for that matter. It's not what you make. It's what you actually keep. And if you take and get greedy, and I'm going to talk about the laws of wealth in 1 second, which is a book I'm writing. If you get greedy, I promise you the money will flee you, because here it is. Let me read you this law of wealth. This is law number 4 of wealth. Wealth will flee its owner if the owner seeks unrealistic returns, or if the owner follows gurus, fraudsters in the pursuit of romantic and unrealistic things and lifestyle. Keeping up with the Joneses is what we call it today. And Warren Buffett said, when others are greedy, be fearful. And when others are fearful, be greedy. That is law number 4 with some other commentary on that. But if you are out there seeking unrealistic returns, I can make you a promise. Your money will flee you if you don't very quickly figure out how to keep your money. And keeping your money is so bloody simple. Buy low, sell high, and don't lose money. That's it. Like, if you have any other strategy outside of what Larry talks about, but he'll take you to a whole nother level, understanding how to make money when the markets do go down, or Sodi teach you how to basically hedge your bets so that even when the market goes down, you have downside protection. Warren Buffett uses these, but just understand, if you're not a professional trader and you don't understand how all this works, that statement right there is the truest statement you will ever hear. And I promise you, I will be right. And all of you that think I'm wrong will be 100% wrong, coming back and getting around the campfire when all your money's gone because you violated that law. What's your comment on that? And then I got one more thing to talk about that was so vitally important about the money that we make today, because there's, I think, one of the biggest catastrophic mistakes that our whole education system is doing is I'm going to talk about that in a second.
I love what you said there. If I could just chime in, the reason I have so much respect for the woman that I'm telling you the story about is she had never made this kind of money in her life. She came in our office. She was literally almost in tears. And we're like, you just made $1 million. Like, what are you upset about? She's like, I'm terrified. I cannot lose this. I don't want to gamble anymore. Like, what do I do to take this money, be responsible, report it to the IRS so I can raise my 4 children and have a different lifestyle than what we're used to? And it's like, that to me is discipline. That's appreciation. I think what's happening is so many people are making this money so fast and they're not that it's not work, not that they're not putting time into it, but they're making it so easy that they don't respect it. And that to me is just like recipe for disaster. So,
all right, everybody, as you're watching this real quick, I want everybody to let us know, like, is this helpful for everybody? Give me a thumbs up, give me a heart, tell me I hate you. I don't care. Good. I love my haters. So, is this helpful? Is this information getting you to think differently about what you're doing and how you're doing it? All right, Larry or Steven, what is your comment on that?
On people making money and then taking it out, or
no, just
you hit a couple of things here.
Yeah, making money, but it's not about making money. It's about keeping money. Just that general statement.
Absolutely. You have to do that. You've heard the word, most people hear the word diversification, right? And they think, oh, that means that I should buy maybe gold and silver. No, that's not what diversification is. I mean, one of the things we teach in investor schooling, we're teaching every single way to make money. So you've got some money in low you know, in low interest or low return investments. You've got money in real estate. By the way, real estate, the #1 best investment ever. We teach people also, and it's funny because I'll walk around and I've got silver everywhere I go, right? So this is a 5-ounce bar of silver. And I have silver everywhere I go. You know why I have silver? You want to know the #1 place that you should put your money? Silver. Now, that doesn't mean that you shouldn't have every other investment, because silver is not doing very well as an investment because it's not an investment. It's basically what's going to happen when the zombie apocalypse happens. And you all know what the zombie apocalypse is, right? When the internet goes down. You don't think this is going to happen? I promise you the internet's going to go down. I mean the entire internet. I don't mean necessarily for years. It may be an hour. It may be a day. It may be a week. It may be a month. But you don't think there's a cyber hacker somewhere that's going to cause the entire internet to go down? Of course it's going to happen. And what's going to happen to your Bitcoin? It's going to be worthless. What's going to happen to your money in the bank? It's going to be unusable. Now, again, short period of time. I'm not being a end of the world-ish, but I'm telling you that it's going to happen. And when you have silver, you're going to be able to do things with that. Or cash, by the way. Cash is another place. The absolute worst place to put money is take $10,000 and put it in a safe. Would you agree with that? Worst place to put money, right?
Well, I don't know. Shit coins would probably be worse than that, but that's just my opinion.
Well, that's fine too. But taking $10,000 cash and putting it in a safe somewhere, or a safe place somewhere, even a safe deposit box might not be a good place because the bank doors will be closed if this happens. I don't care if you're buried in your backyard. This way you have money where no one else does when the zombie apocalypse happens. So I tell people to take some money, put it into silver, take some money, put it into gold, take some money, put it into cash. Then I also tell them, absolutely, buy real estate, buy real estate, buy real estate. You want to invest in crypto? Have fun. I mean, your person who made $1 million, she didn't start out thinking she was going to make $1 million. She put whatever she put in. Let's say it was $10,000. She put in $10,000, and she would have been thrilled if it went to $20,000. It just happened to go to $1 million, most likely because she wasn't paying attention to it, which is really funny, right? And she became a millionaire. That's fantastic. But now, what do you do with that $1 million? Buy real estate, buy silver, put it into a fund maybe that's getting a lower interest rate. You know, you said something before, unrealistic returns. You know, I have a company called Investor Schooling. I teach people real estate investing. I teach people stock options trading. I teach people, anything that has to do with money. I teach people how to save money on their taxes. If it has to do with money, we teach it, right? So I had one time, and it blew my mind because it was early when we first opened Investor Schooling. It was early, and people were like, they had these unrealistic expectations of what they would do, how much money they would make coming to our school. I actually had one person complain to me. I swear to God, this was her complaint. Because I was telling people, and it was true, I was making about $250,000 to $300,000 a year trading stock options. And she said, I want to make $200,000 to $300,000 a year trading stock options. And I'm not. You lied to me. I go, well, how much money did you put in your stock options account? Well, I put in $1,000. I'm like, wait a minute, hold on.
She wasn't
and that's when I realized that I have to set normal expectations to these people. So now we talk to every single person who joins the school and say, okay, let me tell you what the normal realistic expectation is. And the first question I say is, if you were to put any money, let's say it was $1,000, $5,000, anything, into an account with a registered rep, whatever you want to call it, a former, what Chris Naugle used to do, and you made 100% on your money, would that be great? And they go, yeah. I go, well, that's probably the absolute maximum you're going to make. So if you put $1,000 in and it turns into $2,000, you killed it. And they don't understand that. They don't understand that. I finally have most of my students, and they're doing really, really well. I mean, some of them are 35% returns, some of them are 50% returns, and frankly, some of them are 200 and 300% returns. But it's rare that the guy's going to do 300%. It's not unusual they're going to do plus 50, but they also have high risk. I mean, I had a terrible year in stock options. I tell my students all the time, I'm transparent. I tell everybody what I'm doing. I had my worst year in stock options in 12 years. Big deal. It is what it is. I've taken money out. I've taken money out throughout the years. There are years I made, like I said, $250,000 or more. Fine. Just have realistic expectations of what you're going to do. I happened to buy Shiba, which is funny that you mentioned it, Chris. I happened to buy Shiba about a month and a half ago, and it was at 7 millionth of a cent. And I thought it was the funniest thing I ever saw. This thing was at 7 millionth of a cent. So I bought it. Sure enough, it turned into, 66 millionth of a cent. That's a really nice return, right?
Yeah.
So I took 100% of the money out that I put in, plus a $5,000 profit. So 100% of what I put in, plus a $5,000, I took that all out. I still have something like 25, 30,000 in that account, and I could care less what happens to it now, right? It's 100% house money, right? So now I started to dabble in some of the other ones like AMP and the other Jasmine. I don't even know what that is. And I don't care, but I'm having fun watching it. It's still going up, but at the same time, I have zero risk. My only risk now is that I may have to pay too much in taxes.
All right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.